Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
I'm Whitney, host of the Real Estate Syndication Show. Every day, I'm interviewing experts that will help you to successfully invest in or grow your syndication business. Hit the like and subscribe button so you'll be on track to learn from the best in the industry.
Our guest is Jesse Fragale. Thanks for being on the show, Jesse.
Anytime.
I think you mentioned that you're looking for apartments in the U.S. now. Is that right?
Yeah. So ultimately, we love the Canadian markets that we've been able to participate in. It's just at the end of the day, it is just very tough to do deals, especially if you're going to want to move into syndication. Like we said before, you want a pref return, even if that means accruing a pref to when you sell it. And in Canada, even our markets that are a little bit looser than Toronto, Vancouver, Montreal's okay. But anyways, we kind of identified a few places in the States that we'd at least like to take a look at. I think Memphis, Charleston, Savannah, we would make a trip out of it. So we'd probably just fly down and grab a car and check out some of the local markets. Like we talked about, one of the benefits of being an agent is we can just call any of the brokers in our local markets down there and say, hey, we got a Tuesday. Do you want to not make any money for a Tuesday?
Yeah. At least buy you lunch, right?
Yeah, 100%. We'll buy you lunch.
So how does that change? Can you complete a syndication in the States even though you're not a U.S. resident, or would you have an LLC in the States? Do you know how that would be structured at all?
Basically, what we did is we talked to, there's a lot of companies in the States as well that deal with cross-border investing. And the long story, without getting to the weeds on it, is it 100% can be done. I don't believe it's a Canadian that creates an LLC. And I think there's certainly a way to get around the withholding tax when you're investing in real estate. But like you said, I think for us, the most logical way to do it would be to step up to that and buy, say, a 20 unit, 30 unit in an American market, own that and have my partner or I manage it with third party management, and then kind of layer on the complexity. Because like we were talking about before, once you're dealing with individual returns, limited partners, definitely starts changing the structure. And I had a few friends that their GP was Canadian in the States. And it was something that they said they'd do again, but they'd really want to make sure that they did it properly. Because I think it's easier, seems obvious, if you have a GP that's a local GP. I'm sure that you've dealt with partners of you have dealt with Canadian investors as LPs, which is a little easier than having the Canadian as a GP.
Yeah, it sounds like it would just be easier for you to just move below the border.
Yeah, I was going to say. Yeah. I got a number of family members in New York, so yeah, maybe that'll just be easier that way. Or I should just tell them to. Maybe I'll capitalize them and tell them to buy a place.
I just wondered, do you have U.S. buyers that ever contact you looking for property in Canada?
Oh yeah, for sure. On the brokerage side,
yes.
Well, first of all, on the leasing side, because we do a lot of leasing because we're downtown Toronto, so the bank towers, office towers, number of clients are American, and then investors. A lot of money is coming from Korea right now. One of our biggest developments in Toronto is Korean money, Chinese, Hong Kong. I'm sure people know kind of the background and seen a lot of Asian money that has been coming in, but that's been slowing down, I think, a bit recently. It's interesting from a leasing perspective. And this goes for anybody that has syndicated office, retail, industrial. It's just a very different culture of negotiating. Like you guys are much more litigious, I think. And not you guys, I don't want to say just you, but the Americans we deal with, oftentimes non-binding LOIs, a million things on behalf of the tenant side that we just say no to because our office vacancy in Toronto is 1.8%. So Americans come up here and they try to do office deals. It's like, how did we miss that deal? It's like, no, the landlord's being too crazy on this term. And then put this in, we'll get this tenant allowance. And then we're like, we're not going to win on that. And then the landlord just says, yeah, no, I'm not doing this deal. So it's a bit of a culture shock for them. And that's just in virtue of the fact that our markets are so tight right now. So I think we're seeing it all across the spectrum, resi to retail, leasing to acquisition.
Yeah. Well, Jesse, we're going to pivot just a little bit. Tell me what's been the hardest part of this journey to going into the syndication process, or at least apartments from where you started. What's been the hardest part of that for you?
So it's interesting. I've never viewed any of the challenges that I've had as being something that has been a negative, because over time, it's just another thing in your tool belt. Obviously, you don't say that at the time because you lose a deal, it hurts. You have an expense that you didn't expect. But I'm actually it's this stage in my career, both as an agent and as an investor, that's a challenging time because we have had the States and Canada, we have had such a good run since the recession. It was a bit of an anemic kind of upward trend, but we're in a place right now where for the last 5 years, everybody's been saying we're in the ninth inning and trying to find deals where the question you get every time from investors that say, see me on Bigger Pockets or something, should I get into the market now? Should I wait? Should I get in? And it's tough to answer that question when we're in such a late cycle, we perceive as a late cycle. So, and Toronto is a perfect example of that. LA would be another perfect example. If you're in my shoes in Toronto, you have $200,000 of equity with a partner, you're very cautious of putting it in a 3.5% cap rate property because you start asking yourself, well, how much lower can it get? And what kind of growth are you going to have with that type of property? So anyways, long-winded way of saying it, it's the time right now to just, I think we really need to be a lot more disciplined. 10 years ago, and I'm sure you've seen this in markets that you've dealt in, you look back in time and be like, oh man, you could go online and you could go on MLS and just find property.
Throw a dart. Yeah.
Yeah. Or at least you throw a dart and maybe it's excuse my French, it's not a great property, but it'll have a cash flow positive return. Whereas now we really have to be dialed in to make sure that the fundamentals work.
Right. So what's a way that you've recently improved your business, Jesse, that we could apply to ours?
Okay, so a huge one for me was such a boots on the ground answer, but we had in our building, there was a company that does a full retrofit of all your plumbing. So we had our apartment was, for whatever reason, it was like a sieve. There was, we were spending, I think, something like $800 a month, $850 a month on water. And for 11 unit apartment building, it was just way too high. It was eight or 900. I can't remember what the cubic feet was in terms of usage. But like I said before, the one benefit of being a broker, we had access to investors that have dealt with other people on their team. So one of the investors told my partner, said, listen, we use a plumbing guy. And he's like, oh, we don't need a plumber. No. He's a guy that he'll do an audit of your building and figure out, basically you pay him, they do an audit of your building, and then they tell you based on their calculations and what they've seen in similar markets for similar buildings, what type of payback they would get on doing the full installation of all these retrofits. So we now came to the first month of after this retrofit. This probably 2 weeks from now, I'll get the bill. But you just saw, I was just looking at our meter reads, and it was just like it was just dropped off a cliff. So I'm excited to see what that ends up being. But as you can imagine, you're getting that kind of help on a 10 unit, 50 unit, 100 unit. It was definitely a win because I think people don't realize we're talking about raising rents. It's always the first thing people think about. They don't think of lowering expenses, where the value captures is the same.
Michael, Suzy, welcome to the show.
Yeah, thanks so much, Whitney. It's a pleasure being on the show.
Tell me about how long you've been there. A little bit of that.
Yeah, so I'm still active duty Air Force.
Thank you for your service, by the way.
Thanks, Whitney. Appreciate your service as well. Yeah, we were in Colorado before coming to England, and I was teaching at the Air Force Academy. They want me to continue teaching, so they sent me to get a PhD for some reason. No,
stop it.
And now I'm over here getting a PhD, and at the same time, once I'm done over here, this is like a 3.5-year gig, and then I'll go back to the academy and continue teaching, kind of finish out my military career there. So I have about around 7 years left, and so after that, we're going to transition to real estate full time.
Yeah, so I am a program manager over here for a biotech company. But through real estate investing and seeing everything that provides and all the great benefits, fingers crossed that I get to go full time in August. So it's very exciting.
Nice. Very nice. That is exciting. Tell me a little bit about, because I get this question often, being overseas for one. I mean, that's a whole nother set of limitations there, hurdles that you all have had to cross. But working full time, getting to the first deal, tell me a little bit about how you all structured your time, some key things that you had to put in place to manage your time and maybe time block or structure, important things that you had to accomplish getting to that deal.
Yeah, that's a great question. And so one of the biggest things actually is the time difference, right? So we are ahead of even California and such by 8 hours. So by the time it was 5 p.m. here, it was 9 a.m. there. So we still had 5 and 6 o'clock on, to 10 or 11 to still talk to people and go to those networking events and get so much done. So that was the biggest, I think, grace that allowed us to move forward. And I mean, we're very much morning people. So we would take advantage of the mornings to get work done and then take advantage of after work just to catch everybody to also get work done. But something that we also implement very well is time blocking. We just found that like when we find times to talk to people or go to networking events or write blog articles and such, that has really helped as well.
Is there a tip around time blocking you can add? I mean, it's a skill that you develop, right? And it's a habit you have to almost create. And it's difficult at first to be that structured with your time, but it's so important. Any tips around making that happen?
I think the biggest thing is you just have to be disciplined with your time. Like your time is the most valuable resource and people tend to waste that more than anything. And so you just have to realize that it is your most valuable asset that you have to give. And you have to be very disciplined and very diligent at like time blocking things, right? And then also prioritizing certain things over other things.
I think another just tip, I guess there's two, is that to actually give yourself the correct amount of time that is needed. So although you might put like, oh, I only need a half hour to write this blog article, like you actually might need an hour. So put in that hour so that your time is allocated for, yes, say you get it done in like 45, 50 minutes, like that's just awesome that you have an extra 10 minutes to maybe like put something else in right away. And then another thing is figuring out like when your green zone is. And what I mean by that is like when you are at like the peak of your creativity. So if that's in the morning, then I would try to time block some of your most prioritized times at the morning. You know, if that's in the afternoon, do it there. But that's just when the most creativity will flow.
That's a great tip right there. And I love the green zone. I love that term for it because I found that also. I love morning time, being up early. I've always thought also being in Eastern time is a plus because I'm ahead of the West Coast, you know, but you all are much further ahead. But, you know, let's dive into getting to that first deal. You knew you had to have boots on the ground. You reached out on social media. So you're putting yourself out there, right? You're going to these events. You find an old schoolmate, I think you said that reached out and said, hey, you know, I'm looking to get into real estate as well. And then the markets worked out. Tell me some other things that had to happen to get to that deal.
I think the biggest thing that had to happen was just finding a mentor for us. Like it was our first multifamily acquisition. Like we wanted to make sure that it was right. And especially since we're raising so much money from our investors, we want to make sure that all the numbers are correct and things like that. Especially for the market. The biggest thing that the driver behind our success was probably finding a mentor that was in the specific market and the specific sub-markets that we were looking in. And he had assets in that area, right? It was just an organic mentor that we found just through networking and things like that. Like Suzy was mentioning, we networked a bunch because everything went virtual and we ran across this gentleman and I just kept in touch with him, kind of developed a relationship and then asked him, hey, would you mind looking over my underwriting? Can we meet like once a week? And chat, look at my underwriting, you know, look at the assets I'm looking at. You've seen them all because you're also looking in the same area, right? So let me know what you think. He was looking for a little bit bigger deals, you know, 150 plus. We're in the range of about, 75 to 125. And so, you know, we weren't in direct competition. So he was more than happy to help out however he could. And then, you know, in return, he would come on the general partnership team. And that's kind of how he would make his money back, if you will.
Wow. Okay. So tell me, what were a couple of things about him that said, okay, this guy could be a mentor for us? I know you said he's in the same markets, he's doing larger deals, those things, but anything else that said, you know what, this is a good fit? And then also, was there any kind of commitment from your side, financially or time or work or anything like that?
The other thing, after just chatting with him back and forth via emails and chatting on Zoom and stuff like that, like I knew he was somebody that I aspired to be just like. I knew like he's several years ahead of me. I want to be exactly where he's at. So I think, you know, aligning yourself with somebody, if you don't see yourself in your mentor's shoes in the next X number of years, then that's not the right mentor for you, right? So I think that's key as well. And then making sure that not only do you aspire to be like them, how successful they are in real estate, but also how they carry themselves and how also they portray themselves to everybody else, right? Like you want to make sure that those other values fall in line as well. So I think that's huge.
That's such good advice right there. And thinking about who that mentor is. I don't think most people see it that way and think about, I want to be where this person is, even to the point, you know, how they represent themselves. I find that so important as well. You know, I often tell a story about how when I was a police officer, I knew that how shiny my buttons were could save my life. And that seems silly to most people, but, you know, like professional criminals know to look for those things for slouchy officers. Right? Officers that aren't squared away, I call it. But, you know, in our business, I find investors, brokers,
all those people are the same. It's the same. How are you presenting yourself? And so finding that mentor that presents themselves the way you want to is very important. What was your commitment? And you don't have to give it a dollar amount or anything, but I just mean, how did you commit it? Was it financially? Was it by work? Or was it just by him partnering with you?
So I tried to add value back to him however I could, whether that was finding stuff on his website to fix or like, hey, providing value, however I could, wherever I saw an opportunity to add value back to him, I would. But he didn't require any monetary contribution or anything like that. He just was giving up his time. He saw the big picture, when he was in my shoes, he had a mentor to look up to. And now he's doing the same, looking back as he's still climbing up, right? So looking back and helping me up as he's still looking forward. So that was huge. And like I said, he would come on as a member of the general partnership team and then get equity in the deal. And that's kind of how he would end up getting paid back for his time, if you will.
No, that's awesome. That's a great partnership there. Tell me steps to getting that first deal, or how did you find it?
So we found it just by networking with a bunch of brokers. This one broker in particular, we had submitted LOIs with him previously. He knew the team that we had built. He actually did a couple of transactions with my mentor previously on 2 other deals. And so he knew that we have a strong team. We can close on an asset. And so when we submitted an LOI on this specific property, he knew that we were strong buyers and he represented us well to the seller.
So he knew you were a strong buyer because of really your relationship with your mentor. Is that what it was?
That's correct. Mm-hmm. And then also I provided, an entire cover letter that had all of our bios, what we've done previously professionally, and all the real estate we've owned combined, and then also submitted that whole package together. So he knew that not only could we close, but we're also professional in representing ourselves that way.
And even a big thing about the cover letter is that we wrote that what lender we had been in contact with, what property manager we were going to go with, and that's huge too, because they could see they've already done the background work. They're not going to go into this LOI scrambling to get all those other, people to become a part of our team.
We hope that you have enjoyed the highlight show today. You can always listen to the full episodes that were featured today by clicking the links in the description box. Let us know in the comments what you thought of this episode, or you can go to lifebridgecapital.com/podcasts and click the feedback button. Let us know how we can add more value to you. Thank you, and talk to you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.